Time. Joining me now is Emily Roland. She's co-chief investment strategist at John Hancock Investment Management. Emily, welcome. And I hope I'm not overstating it, but you do see opportunity here.
We do. And Kelly, I certainly wish we had done this interview yesterday when I wrote that. Clearly, stocks are ripping higher today. But look, we started the year with the S&P 500 trading at around 21 and a half times forward earnings. And we've seen that come down again to about 18 times forward earnings. So we're seeing this environment in which this negative price pressure has been driven by a couple of key elements, which are quite obvious. I think the Fed's start of the tightening cycle, as well as this Russia-Ukraine crisis. The bottom line is that the fundamental backdrop, though, for stocks is still there. So we look at things like next 12-month earnings growth, and analysts on the street are continuing to pencil in better earnings growth prospects here in the U.S. while we're seeing that price pressure come down. So that's resulting in this resetting where the fundamentals are there. Across bonds, you're seeing now 3.5% to 5% across corporate bonds in the triple B. In the double B space, that was more like 2 to 4% last year. So there's better opportunities opening up right now, both in U.S. stocks and bonds, which frankly don't go on sale all that often.
Sure. And so you gave us some examples of where you're looking in the corporate bond space. In the stock market, you do like the industrials here. Now, would you play that with specific names? Can people feel comfortable with sort of basket ETFs?
Yeah, industrials have been an overweight for us for some time here. And really what we're looking at is the great relative earnings growth prospects. So the industrial sector has the second highest earnings estimates, right behind energy now for 2022. It has those great quality metrics that we like, good balance sheets, good stability as far as earnings, good cash flow. And we're seeing also that cyclical element in industrial. So they are a value sector, a cyclical sector that actually doesn't need a steeper yield curve to exhibit market leadership. And we're clearly seeing that flattening yield curve environment play out. Another element that's now been added to the mix in terms of a tailwind for the industrial sector is the fact that it is a big part of the commodity complex. And in our view here, the U.S. is really going to need to step up as far as investment in areas like energy infrastructure, areas like farmland, even areas like defense. And the industrial sector is really part of that ecosystem. And we think will play a big role as that investment plays out to continue to meet this elevated demand and fill the gap that we now have based on Russia-Ukraine. And
I see you like names like Caterpillar and Deere in particular. Emily, we'll leave it there. Thank you so much. Emily Roland with John Hancock Investment Management.
Shepard Smith here. Thanks for watching CNBC on YouTube.